Good day, fellas. My name is Great Okonkwo, and I am the CEO of Diamond Ethical, where wealth is born of character. Who's Diamond Ethical? We're simply a financial loan broker firm and financial technical advisor for startups, pre-launch businesses, early stage entrepreneurs here in the great state of Texas. So we help you get access to funds that you need with a minimum of $100,000 in capital raise. Now, we've partnered with the 501c3 nonprofit organization to bring this to you. Today, we'll be talking about the 27 mistakes that will get you denied for business credit and loans as a business owner. Now, this is everything you should know about accessing capital, but you don't because nobody told you about it, right? So why does this matter? It's because lenders and credit issuers will almost always decline you based on the fact that you don't meet their funding approval standards, and which is typical, it's quite understandable. However, there's a formula you should know in order to meet this funding criteria that they set in place. If you meet it, they'll often get you approved instantaneously, almost instantaneously. If you don't meet it, you automatically get declined. So understanding this formula is the secret and the key to why you have been denied in the past or declined in the past or even now, because lenders don't owe you an explanation most of the time of why you got declined. So this is essential to ensuring that you get approved for the next funding you apply for. Nevertheless, though, you got to understand that not all types of capital are created equal. In other words, they don't all have the same approval requirements. So let's get to it. Now we have 27 mistakes. This is number one, business name mismatch. You see, one of the most common reasons for loans and credits being denied is that the lender can locate your business online, which is a big problem because the business name on your application should be the exact same name as what's listed online and with your Secretary of State. There's no surprises to it. It is very important that you use exactly your legal business name in filling out those applications and whatever you put online. Ensure your business name is exactly the same on your corporate papers, that it's exactly the same on your licenses, that it's exactly the same on your utility bills and bank statements. Also ensure that your business name matches to online listings. So if you list your business on Craigslist, on Angie's List, or even a Facebook ad, let it correlate with what you have on the paper because lenders check those things out. Number two, not being in good standing. You have to ensure with your Secretary of State that they have all of the necessary and correct information for your company and make sure that you're in good standing with them. Now, why is that? First of all, you gotta make sure that your entity is active and you need to file annual reports. It could be taxes, whatever they require. Also, when you have an entity, you pay a yearly or annual fee to stay active. Verify with your Secretary of State what fees those are and make sure to keep updated with them. Make sure you keep those paid. Number three, high risk industries. Many lenders will automatically decline you if your name indicates just a little bit that you're in a high-risk industry. Now, what are those high-risk industries? We have the ammunitions, we have the weapon manufacturing, bail bonds, check cashing agencies, energy or oil trading, pawn shops, and adult entertainment. So that's no surprise. All these companies mentioned right now make a ton of money though, but they're very risky to lenders, okay? Now, the other industries that are considered to be high-risk industries include agriculture, auto sales, careers, software services, dry cleaners, general contractors, gas stations, hotel and motels, jewelry, wholesale and retail limousine services, real estate agents or brokers, not the agency, but the individuals, the real estate individuals, they call them realtors, and taxi cabs. Those are considered high-risk industries. So if you have those, beware. Number four is the entity selection. So to get financing or credit for your business, it is best you have an entity, okay? A corporation or an LLC gives you more credibility. And that's number one, it gives you more credibility. But number two is that it helps you reduce your liability. So if you get sued by a customer or client, you don't get liable personally for it. The company takes care of it. Okay? It comes out of the company bank account. And also most investors do this because they want to make sure their money is secure. That's why they also prefer a C corporation type of entity. So make sure your entity is set up in the same state as your business address. Wherever you put your business address at, make sure that entity is in that same state. Otherwise, it will be chaotic. When lenders look it up, Duns Bradstreet number pops up, it doesn't create a good perception of you and your business. So remember also, it's all about perception of credibility. We're trying to create a perception that builds credibility so that lender deems you fit for funding. Number 5, EIN number. Whether you have employees or not, your business entity must have a federal tax ID number, which is called, in other words, an EIN number. So just like you have a social security number, your business has an EIN number, which stands for employer identification number, guys. So whatever your social security is to you, that is what your EIN number is to your business. That's amazing, right? So your tax ID number is used to open your business bank account. And it's also used to build your business credit profile. No surprise. But also make sure to take the time to verify with all these agencies, your banks, your trade credit vendors, that your tax ID number is listed with them correctly. Because it's very critical that if they look at your information, your business information, that they see the same thing across the board. Also, make sure that your address with the IRS is the same as listed everywhere else. On Facebook, you know how we have Facebook pages. If you have a business Facebook page, make sure it's listed the same. If they look at your website and your Facebook page, it correlates, If they look at the application that you have with, or the document you have with the Secretary of State, it correlates together. Number 6, business address. This is one of the most important mistakes that are being made that should be easily fixed. Your business address should be a real brick and mortar building with a physical address, because if you have a good business address located within a geographical location where a tax authority gives grants to businesses, you would have hit the jackpot. So a home address or PO box is often not an adequate substitute because lenders they see it as shady. You can work from home, that's okay, but don't let your business address be from home. That's what we're saying. Now, this is not the same across all lenders' requirements, but it is best practice. So lenders will check with USPS, Google Maps, etc. to ensure that the categorization of the address is correct and it's listed properly and publicly, okay? So your virtual addresses are only acceptable if your address matches with the IRS information, with the state information, with your bank information. So you see, your bank is also another thing where you got to list your business address correctly, okay? In some cases, banks and Duns Bradstreet would push back on virtual addresses, okay? Because they see it as shady. They don't want to, I don't know, is it credible enough? You don't be receiving business mails, at your business. It doesn't create a good perception. Number 7, business phone numbers. This is extremely important as well because most lenders perceive a business phone number to be a sign of credibility, guys. Credibility, let that word sink in. That's what we're trying to do, make you credible and irresistible to lenders. So even if you're a single homeowner with a home-based business, a true business number provides the perception that you are an even bigger company. So we're creating a perception of credibility, guys. Remember that. Perception of credibility. So it's easier and inexpensive to set up a virtual local phone number or a toll-free number. Especially in the days we live in right now. So having a fax number is also something we advise you to do, just to have it, creates more positive perception, with your business. Number 8 is website and email addresses. Credit providers will often research a company on the internet, like we said earlier, right? It is best practice if they learn everything they need to learn from your website. But of course, most of the time they won't, for whatever reason. But the reason we want you to avoid is the negative reasons. Them seeing something on Facebook or on Google, My Business, and seeing something on your website differently. It would be best if you say you're a tattoo artist, they go to your website, they see all the information they need to know about you being a tattoo artist. The same goes with you being a hair salonist, whatever, accountant, and name it. So not having a website will actually hurt your chances of obtaining business credit. Now, we're talking about business credit in this one. So it won't hurt your chances of getting a personal credit, of course, but for getting business credit, for obtaining business credit, it will definitely hurt your chances because they look into those things. So additionally, it is important to get a company email address for your business. It's extremely essential. We've tried using this method with a free Gmail service that messed up so badly. We were messaging companies with a free Gmail account under one of our businesses, and guess what? Google banned us permanently with that account. We lost everything information wise on that account. We had to create a custom professional email address. So do not use Yahoo, AOL, Gmail, Hotmail, or any similar type of free email service for your business. It's not credible enough. Now, it depends on the type of industry you're in. It might work, but for best practices, like we said, don't do it. If you don't have this in place, we can actually assist you, so no worries. Number 9, business bank account. Your business banking history is vital, as you should know, to your future success of being able to secure larger business loans. So when you just get started, you might use your personal bank account. However, be wary that most lenders will not wire the money to your personal bank account when you get approved for the loan. They will wire the money to only a business account. So they want to protect themselves, by law in case of any liabilities. So the date you open your business bank account is the day that many lenders consider your business to have started. Isn't that crazy? Most businesses operate only on a personal basis, but they call themselves businesses. However, when you check their financial record, it's only on a personal basis. It's hard to differentiate what's coming in and what's not, what's a revenue, what's an expense for the business. So the longer your business banking history is, the better your borrowing potential will be, okay? Many banks will also require or at least expect you to have an open, business checkings account if you want to receive a loan from them. Number 10, business licensing. Make sure you have the proper licensing for your company. If you're a plumber, make sure you secure that. If you're a mortgage loan professional, make sure you secure that. Also, make sure the address on your licenses is the same as all of your other documents. These are simple things to start off with. So if you're going to start a business, the first thing you do is not file with the Secretary of State. The first thing you do is secure an address. That's why I can't stress it enough how important an address is. It is extremely important, especially when building business credit. You need to contact the state, county, and city government offices to see if there are any required licenses and permits to operate your type of business, okay? Number 11, business credit reporting agency profiles. So we often see denials to applicants not being set up properly with the business credit reporting agencies. Most of them don't get set up at all. And the others that do get set up, they don't have all the information credibly, situated, like the address, correlating across the board. You often see declines if you're not listed with the business credit reporting agencies like Duns Bradstreet, Experian, TransUnion. So if you don't have an established credit, it's important to make sure that all the documents are intact and you file properly with these business credit reporting agencies. Start now, if you haven't already, by getting your free Duns and Bradstreet number, okay? From Duns and Bradstreet. You get it, it's free of charge. Now, if you don't know how to do that, if you haven't done that at all, we can assist you, okay? So don't worry about that. Number 12, inadequate business credit scores. You should at least establish credible business credit ratings with Duns and Bradstreet and Experian Business. So those are business credit reporting agencies. You need to establish credible business credit ratings with them. Now, to establish that, you should understand that the business credit score is not like the personal credit score. It ranges from 0 to 100. And obviously the higher the better, right? Just like your personal credit score. Now you can quickly establish an 80 plus business credit score. That's good. Duns and Bradstreet's credit score is called a Paydex score. Experian business credit score is called an Intelli score. Just good information to know. Now, once you establish an 80 with each credit bureau, you must continue to build to increase your recommended credit limit in order to access capital. So the higher you get with the business credit scores, the better opportunity for you to have a bigger credit line for your business, okay? Number 13, inadequate personal credit scores. While accessing business credit does not take into consideration your personal credit score, most business loans will and do. So with the exception of one business lender that we work with, they don't usually, have a minimum personal credit requirement. Now, many other lenders, including the SBA, use a variation of credit score calculations called the FICO SBSS, Small Business Service Score. So that's what they use, the SBA. It's a variation they use, which is a combination of your business and personal credit scores. So take that into consideration when you're working on the business credit with the SBA, work on the personal credit as well. So generally, you need to have at least 165 FICO SBSS for traditional business loan approvals. So obviously, you should be actively monitoring or managing your personal credit and know the scores, right? Number 14 is collateral. This is a powerful session as well. It is as important as having a business credit. It is as important as having a business address. Now, while accessing business credit does not take into consideration your collateral, most business loans will. Now, what are collaterals? They are simply assets that you, as the borrower, is pledging in case you default on the loan. So different lenders and different loans have varying collateral requirements. So one of our popular lenders will actually accept items such as clothing, furniture, electronics, etc. as collateral. Now, this is not a lie, but one of our lenders one of our borrowers was pledging, I think about 100 and some pairs of shoes that they had as collateral, and this lender accepted it, So it's very rare. We don't want you to put this as a typical thing. It's very unusual to see lenders accept that. However, some, the ones that do. We have the most you see are fixed asset type of collaterals like real estate. And we also have the ones that accept a life insurance policy on the borrower to secure it. So when you get that life insurance part, it's assigned, we'll talk about it a little bit, it's assigned to the lender just in case you default. Number 15 is business plan. While accessing business credit does not take into consideration a business plan, most traditional business loans do. So there are different business plans for different purposes. So just keep that in mind. Most of our popular SBA lenders they require only about 1 to 2 pages of business plan. So you don't have to go write a book, for a business plan. Number 16 is financial projections. While accessing business credit does not take into consideration your financial projections, most traditional business lenders do. So these financial projections include the monthly revenue that you're projecting for your business and the expense projections. Typically a 36-month projection. So if you're doing a financial projection in 2020, which is when we're recording this in 2020, December, if you're doing a financial projection in 2020, they want you include up until 2023, December. So that's typical what they require. So the construct of your financial projections must meet the expectations of the lender. And it makes sense because the lender wants to make a profit for lending you money. If you're making ridiculous financial projections, no, and it's not possible. So remember, again, another thing to keep in mind is when you are trying to borrow money, you have to understand the mind of the lender. A lender won't lend you money without you meeting a credibility factor. No, because otherwise, how are you going to pay them back? What is the measure you're going to use to pay them back? Just to trust your word? No. Some lenders have specific format that they want you to use in creating the financial projections. Now, we will help you create a set of financial projections as we go through the Access to Capital program. So we work with you on that, okay? And number 17, uses of funds. While accessing business credit does not take into consideration your uses of funds, traditional business loans will require one. So this is essentially your shopping list of what you're going to buy with the money you borrow and how much it is going to cost you. They want to know all these things. So the items on your list can actually influence the selection of the source of capital you pursue. So make that list worth it. Make the time to create a very adequate list that can influence that for you. Now, if you don't know how to do this, we can help you create this as well, while we go through the curriculum in our Access to Capital program, and it's free of charge to enroll in our Access to Capital program. So come on in and go on the website, you see it. Number 18 is industry experience. While accessing business credit does not take into consideration your industry experience, traditional business lenders actually will evaluate your relevant business education and experience in the industry. So for instance, if you want to buy a food truck and I need money for it, the bank would actually be concerned with your experience owning or at least operating a food truck. Do you know how to operate a food truck? Your answer better be yes, and with a proof, right? So having a well thought out personal bio is valuable, it's extremely valuable. And you should highlight your education, you should highlight your relevant experiences to increase your chances of getting approved for the funds. Number 19, advisors. While accessing business credit does not take into consideration your advisors, keep in mind that traditional business lenders will be interested in the team that you hire or use to help you be successful. That is a very credible reason, okay? Most businesses should have the following. Number one, a CPA, an accountant for tax guidance, for tax return preparations, an attorney for formation issues, for compliance issues, for account receivable issues, for contract issues, etc. So a business coach, you should have that for the mindset part, okay? Strategies and accountability. Someone will keep you accountable. What do you do after funding? If you guys have seen the movie, the show Billions, you see that, what's his name? Axelrod. He had this business coach who was a psychologist, right? She was a psychologist to the entire elite departments in the company. And this, we're talking about building your standards. You as a newbie in the company should think that way. You should have that approach if you want to be successful, right? Well, in the show, when they have a bad day, they go into her office and she treats them, asks them questions, have them bring out the dark side that made them feel whatever they're feeling, just to restructure their mindset to put them back in the game. It's a marvelous show, by the way. If you want to see it, go see it. It's called Billions. So you should also have an insurance agent, which they will verify all these things to make you look more credible. Remember, we're trying to build a perception of credibility, right? So this will help. The insurance agent would be in charge of proper coverage and at the right price and with cash accumulation, okay? Which is amazing. If you don't have that, we'll help you with it. Now, also a capital advisor who can give you access to capital needed when you want a short or long-term, type of funding. So you need to have that as well. So if you don't have any of these things, we can actually help you with the CPA, with the attorney, with the business coach, with the capital advisor, with the insurance agent. We can help you with all the above. Number 20, feasibility data. So while accessing business credit does not take into consideration feasibility data, traditional business lenders would like to see third-party substantiation to support your assumptions. Okay, so they would want to know who your target market is, and that target market would be a third party. That's how they see it when it comes to data. Someone's providing you data on the target market, on your competitors. Now, when you have that third party which produces that feasibility data, it gives lenders an additional confidence in lending you money. So these are little things that we can actually help you with, but these are little things that help build credibility when presenting a deal or package to a lender to oversee. That's why we're able to guarantee you a minimum of $100,000 in capital, because we work with you to get it done. Number 21 is target market. While accessing business credit does not take into consideration your target market, traditional business lenders prefer to know more about your target market. For example, what is the income, age, what is the race, what is the gender, what is the location? Because all these things actually affect how the market runs, believe it or not. Of course, in a real, different type of world, we don't expect race to matter. Apparently it does, because it's kind of congruent with culture. So the way a culture does sometimes is attributed to the race of the people. Unfortunately, that's how the world works. We're trying to break down those barriers in life. However, for now, it's what it is. So you need to know, the market you're in. So you find out how many people are in this cross section of your society. Who are the hard-headed ones? How do you approach them? If you're in a Mexican culture, this is what you're gonna do. If you're in a white occupied community, this is what you're gonna do. If you're in a Black area, this is what you're gonna do. If you're in an Asian area, this is what they like, because you deal with people the way they want to be dealt with, right? So it's important to know these things in business. It's crazy, but it's true. And we'll address how you can reach them, because that's what we do. If you don't have any of these things, again, we can assist you. So have peace of mind. You don't have to figure it all out by yourself. Number 22 is lead generation. So while accessing business credit does not take into consideration lead generation, traditional business lenders actually prefer that you know how you're going to generate the leads, right? Makes sense. If you're in business, you got to generate leads which leads to sales, all right? So for most businesses, they start with generating leads and then they work their way into converting them to clients or customers. The problem with that is inadequate leads usually lead to financial troubles in most instances. So if you don't have any of those things, we can assist you, no worries. Number 23 is inadequate insurance. This is very important, as important as collateral, okay? Because all businesses need insurance. Protection is a sort of collateral to protect the lender, to protect the business in case something goes wrong. If it gets burned down, if the owner, has an unexpected illness, things like that. So if you borrow money, you need a key person policy. If you have business partners, you need a buy-sell policy. If you have employees, you will need workers' comp, health insurance, retirement, etc., things like that. Business insurance policies are actually different from personal insurance policies. So just so you know, it should be glaring, but we got to say some things so you know. For example, in a key person policy, your company typically owns a policy and your company is the beneficiary just in case something happens to you, because you are the insured, okay? So the lender receives a collateral assignment. I just talked about this earlier in the video, that when you have a collateral that is an insurance, you assign it to the lender in case something happens to you, like you die or you fall sick and can't work, things like that. Now, this is used to cover the exposure of the loans in case you were to die while the loan is still outstanding. Okay, make sense? Number 24 is inadequate cash contributions. If you want to borrow money from the bank for a conventional SBA loan, you should plan to contribute about 20% of the project. So this is like the desired capital raise. It is good note that a cash contribution for a project could be more or less. It could be more than 20% that they require you to contribute, or it could be less than 20%. But mostly we see 20%, okay? For example, if you want to borrow $100,000, you typically need to contribute about $20,000 for the bank to loan you the remaining $80,000. So if you don't have this, it's okay, because we will need to layer in capital and focus on other sources of capital that don't require a cash contribution, and we can do that. Normally, you can borrow your contribution. So that $20,000 that you put up, you can't borrow it because it needs to be sourced capital, illustrating or creating the perception that you have skin in the game. Again, we're in the business of creating perception of credibility, which is going to be real though. It's going to be real credibility, but we're also creating that perception that it is real, even though it is real. Number 25 is not run the business like a business. Very important, guys. There are so many examples we could insert here for better understanding, but just here are a few. If you're not using QuickBooks or some similar software to track your business revenue and expenses, you're not running your business like a business. If you're not setting yourself up on a salary with appropriate tax deductions, you're not running your business like a business, because you would even save a lot more money on taxes when you set yourself up as an employee of the company that you own. It's an amazing trick. And now this is legal, so we're not giving you something that is black marketed, But doing this can move you from self-employed to not opening up yourself or your personal, access to capital. So it's good that we don't want you to be a self-employed. I know there's pride in it as men, or women don't have to struggle with that, but most men struggle with it. They want a sense of pride. I am self-employed. But when you look at the reality of it, they're paying a lot more taxes than someone who is, technically an employee of their own company, So you have to be honest with yourself in determining if you want to run a business like a business, or if you want just a hobby. If you want to run a business like a business, you should run it like a business. Now, if you don't have the capital to run it correctly, then you need to evaluate your business model and sources of capital so to match your circumstance or your present circumstances. Now, we will set you up with an experienced financial literacy educator for a strategy consultation that we actually pay for, in order to work with you through the high-level topics that we've discussed in this video. Number 26 is picking the wrong business for your circumstances. Regardless of your education, experience, passion, interest, hobby, etc., we recommend working in reverse. What does this mean? We want you to determine your access to capital first. What type of capital do you need? And then we want you to build your business plan to match your goals or your circumstance, where you're at. You can't just want an $8 million and not have a strategy to do that. First of all, you need to know what type of business will give you, what type of business would require you to have an $8 million. So most clients don't even know the type of funding they require. You can be looking for factoring or account receivable type of funding and go to a real estate investor to lend you the money, or hard money loan. Now, it doesn't work like that. So that's why we want you to work in reverse. Determine access to capital first, build a business plan and match it. So we know that any company can gain access to at least $100,000 of capital, regardless of the owner's personal credit score, right? However, if a person has no money and bad credit, it's going to require a business plan, a solid business plan that can, cash flow quicker than they can imagine. So that's what we help you do. We help you with creating the cash flow method or model, business model, and we can help you with the credit part. the collateral we can suggest on what we can do to get you collateralized. So fortunately, we do have what we call a grant funding through the Opportunity Fund to inject up to $10,000 per month to provide you with the seed money, just to get you going so that you qualify for a bunch more. Because once they see once the lenders see traction in the business, they're more interested. Okay, there's something to this. Okay. Now, last but not the least, number 27, wrong source of capital. As our final list of mistakes, we need to make something absolutely clear. Different sources of capital have different underwriting criteria. Different sources of capital have different underwriting criteria. Therefore, it is crucial that early in your capital raise journey, you should identify the right, type of funds. That's what we talked about earlier. You need to know the type of funds you're looking for. Depending on the industry you're in. If you're high risk, that's something. So keep that in mind. And this is always unique for different individuals, okay? So you must ensure that you meet the underwriting criteria for these types of funding. In many cases, you will likely layer in multiple sources of capital to reach your ultimate goal. So if you're looking for like say 100,000, we might layer in 15, 20, 45. Excuse me. So it just depends on how credible you are when we start working with you, and to the point where we try to get you the strands of funds or the trenches of funds. Any business can access at least 100,000 in capital, guys. Any business. Now, thank you guys for watching. Thank you for the opportunity to watch this video, tune in to Diamond Ethical. If you have more questions, which is typical, book a session with me. We'll talk about it. Okay? It's free to book a session with me. I'll give you more ideas. I'll give it free to you for free. And we'll talk about where you're at in your business right now. Now, you can see more of what we do. Go to our website, www.diamondethical.com. Or if you have more questions that you don't want to talk, you can email us at info@diamondethical.com and we'll respond to you. In the meantime, guys, it's a wrap. Thank you for tuning to Diamond Ethical, Wealth Born of Character. Again, my name is Great Okonkwo. Have yourselves a blessed day. Bye-bye.